right, as we continue forward on our adventure here in the ag commodity trade, I'm Marlin Bohling with you. I want to call on Tommy Grisafi of Advanced Trading to join us and provide his thoughts on what we're witnessing here in our trade today. Tommy, good to have you on board. Hope you had a good Christmas holiday with the family. Saw some of your posts. It looked like you were having fun. Interesting how we have the wheat market, of all things, taking a leadership role today. I didn't expect that when I came back from vacation.
Yeah, just sneaking a peek at my quotes right before we went on. There's some nice little green on the screen, and wheat is standing out. So Border Trade, KC, and Minneapolis, all strong. They came out of the gate pretty strong. And corn's looking over saying, well, if you're going to go up 20-some cents, I better go up 4, which is fine. We had export expectations. I just looked at that. They look okay, or in inspections, not expectations. They're past the expectation part. They've been inspected. There was some pluses and some negatives there, but overall, you got to wonder who's working this week. Like, the only reason I'm still working today is because I knew I'd be on with you. Of course, we're always available, but yet many professional traders, brokers, analysts, I mean, there is the only person who's going to access these markets are going to be someone who needs to. This is not the day or week to say, I'm going to go become a grain scalper or grain trader, or I'm going to put on a really large position. But no, that doesn't not mean we can't move. Take, for example, crude oil up 250. Take, for example, natural gas going down. It was 60 degrees on Christmas Day here in the Midwest for many folks, and that's definitely affecting the markets. But all eyes on that Red Sea. And as you know, if those boats can't go through the Red Sea, they have to go all the way around, and that's twice as long. And that's just not good. So although we all wish for peace on earth this Christmas, we did not receive that, my friend. And the world is a crazy place. So I don't know how to say it politely on TV.
Yeah, well, we were talking about it earlier today about how, the conflict in the Middle East has been expanding. And I mentioned that a merchant ship had been attacked 200 miles off the coast of India. And now I hear where India has issued 4 warships to monitor the Red Sea area now to protect their own boats. Maersk has said they're not going to ship through the Suez Canal or through that Red Sea area. There's been, I think, about 5 other companies, maybe big shippers, that say, nope, count us out. We're going to go around Africa. But man, that's got to be really expensive, Tommy. I just wonder, in the final outcome, what is that going to do overall? It can't be good for the economy, can it?
No, I do have an answer for it. It means in anything you're doing in business or shipping, you can't wait for just in time. So there was a time several years ago where the world was just a much more peaceful place, and the Panama Canal had plenty of water, and people, friends, and family I know were visiting Tel Aviv, not running away from it. So that's changed. The days of just thinking you're going to order something and it's going to be there a few weeks later, it's not like that right now. Not only in grain, as we talk about on this show, but in computer chips or other things, it makes for a logistics problem. Remember that time that ship got caught in the canal that Egypt shipped, and just the craziness that caused. So interesting times, interesting people. Glad we get to talk about it every day on radio and TV and everything else. But the one positive news we have is bad things in the world sometimes mean that wheat and other commodities are going up, especially crude oil. And I do feel that the United States government and any government around the world was kind of be rooting for lower crude oil prices, especially coming into an election. But geopolitical events will heighten the price of commodities like that.
Well, let's dive in and see what the markets are doing right now then. We'll start with our corn board here. Our quotes, of course, are provided by Bar Chart. You know, corn is hanging right in there, as you alluded to there, Tommy. You have March corn 5 3/4 higher, 478 3/4, and you have the May 5 1/4 higher at 491. The nearbys flexing the most muscle, which is usually a fairly positive sign. Soybeans can't seem to get their act together, though. You have March now at 1307 3/4. Now it's back to a penny and a half higher. It seems like I've been mentioning all day long. It goes back and forth, higher and lower. It just doesn't have much of a range to it. But for the moment, it just seems weak in the knees. Why?
We're not running out of soybeans anywhere, and we depending on the weather, we could have less soybeans, but deep down, I feel there is enough soybeans on the world market. And Argentina and Brazil continue to plant so many acres. Now, private analysts came out and lowered that yield and maybe even the acreage a little bit, but you have to imagine how much we planted. When I was a young guy at the Board of Trade, Brazil and Argentina, they were barely in the grain business 30 years ago. So a lot's changed. A lot of people, we think of the grain business as an American thing, and we need to think of it as a world thing.
And look how far we have come on a March chart. Here we were up at $14 back there in early November, and now we're down just barely above 13. Gave back a lot of ground here so far. But on the wheat, as we mentioned earlier, Chicago March wheat 22.5 higher at 638 3/4. Kansas City on that same March contract is up 23.5 or at 646.5. Minneapolis wheat, the spring wheat variety, we have March now 17 higher at 731 1/4. Again, a quick thought on the wheat as to why it is so strong.
Yeah, I would credit that to the geopolitical problems, but I do want to go back on that soybean futures. Yes, that is the futures. But we have experienced an absolutely hot cash market here the last few days for people along the Illinois River. So if you're anywhere in the middle of the Midwest, check your cash market, hot basis, aka cash market here. End users, processors, people in the shipping business looking for soybeans, you may get much better than the Board of Trade price. So remember, you don't make money growing corn, wheat, and beans. You make money selling them, my friend.
That's very interesting. Wow, thanks for the heads up on that. Yeah, I encourage everybody to check that out. Depends on your locality. All right, Tommy, we'll take a break and come back and talk cattle and hogs after this. Now, as we switch over and take a look at our livestock trade here, this live cattle board has just been gradually increasing as we go through the day. It's been very slow. It's been very methodical, but there it goes. February now up at $1.32. We're at $169.85. Just a dime off of our high of the day now as it just continues to slowly grind higher. And the nearbys are showing more strength than the deferreds are. April is up 97 right now. Okay, on the feeders, this is the one that opened up under big time pressure this morning, and the March is now at 224.02, only down 37 cents on the day, and that's the only one that's lower out of all the contracts. Everything else is higher. The April is up a nickel at 229.57. That means we're $3 and almost a dime off of our earlier low here this morning. Intriguing turnaround here in the feeder cattle market, even though if you look at the prices right now, you'd say it didn't do much today. Well, you have to look at the whole picture. On lean hogs, now here we're getting pounded on the nearby contracts. February, some would call it, down $2 at 69.35. April down $1.47 at 76.10, and May is down $1.15. Now here, the nearbys are leading the charge to the downside. If that's the case, Tommy, what do you call that? Is that called bear spreading when it's all negative like that?
Yeah, there's pressure up front, and there's a reason for that. My two business associates I work with at Advanced Trading, Tony Dunker from Quincy, Illinois, and Brady Huck from Dodge City, Kansas, they broke down that report after hours, and an interesting note came out on the hog and pigs report. The USDA went back and they re-estimated up the overall supply, and I think that's why you'll see those front months down. There is still hope for the June month. We need to get that up around that 95 level. If it got up to 100, that'd make folks happy. But as you know, it's tough to be involved in an industry that only allows you to make a profit one quarter of the year. And unlike grain farmers, you just don't get in and out of the hog business. Not that grain farmers get in and out of it, but they could plant corn, beans, wheat. They have choices, especially folks up north. And the cattle people and the hog people, they don't have choices. They're in that business. And you are right, switching over to feeders, my friend. They look like they're a slow day, but obviously if you came in long a bunch when we touched down 325, felt like they could have a bad day. So the fact that feeders are stable and unchanged is an absolute win for the cattle producer. I'm keeping an eye on those June live cattle. I have clients who would like to be an aggressive hedger, $4 or $5 higher in here. If they were to rally $10 from here, they'd probably be upset that they hedged them there. But right now, that sounds like a good idea, and we're sticking with those open orders, $4 or $5 higher in live cattle in the deferred months, my friend.
Tommy, you can count me as aghast that USDA would revise old numbers. Oh my gosh, what's the world coming to? Never heard of that one before. Tommy, always good to visit with you. Thank you, sir, for enlightening us this morning. I appreciate that, and Happy New Year to you. If I don't talk to you before then, Tommy Grisafi with Advanced Trading with us here this Tuesday morning. I guess it's still morning in Central Time.
Still morning where we
Tammy.
are. Yeah, Nashville, Tennessee. Yeah, Tommy's always got good info.